Welcome to Intentional Divorce Insights. I'm Leah Hadley, certified divorce financial analyst, accredited financial counselor, and the founder of Intentional Divorce Solutions. I'll be your guide through the complexities of divorce, finance, and emotional wellness. Join me as we uncover practical tips and empowering insights to help you navigate your divorce with clarity and intention. Hi there, and welcome back to Intentional Divorce Insights. I am so happy to have our guest here today because we are talking about something that comes up in so many cases that I work on, and that is mortgages and divorce. So I'm thrilled to introduce LeeAnn McKeon. LeeAnn is a distinguished professional with over 30 years of comprehensive experience in the mortgage lending industry. Recently, she achieved her Certified Divorce Lending Professional designation, recognizing the unique challenges faced by clients going through divorce. Understanding that individuals in this situation need specialized support and knowledge, LeeAnn is committed to providing essential information and insight. Her approach is grounded in empathy and understanding as she navigates clients through a particularly challenging period in their lives. With compassion, kindness, and patience, LeeAnn is dedicated to guiding her clients every step of the way. Thanks for being with us, LeeAnn.
Thank you, Leah. It is an honor to be here. I look forward to our time together today.
Absolutely. I'm wondering, you've been doing this for a really long time, over 30 years. How has that prepared you for working with divorcing clients?
I have worked with people in so many different phases of life. And I realized the biggest gap in sharing of knowledge and information seems to be in the divorcing segment. Clients that are divorcing, there is a lot of misinformation as well as lack of access to information to properly strategize. So I realized with my experience in working with people through all their phases, I have something to bring to the table that's of value.
Yeah, absolutely. And I love what you said, LeeAnn, about strategizing, because so often, when I'm working with a client or a couple, very early on in the process, I'm encouraging them to speak to a lender because we don't necessarily know what all the options are. And I hate for people to start negotiating before we truly know what those options are. So I love the fact that you're looking at it really through that strategic lens.
Mm-hmm. That is crucial. And the sooner, the better, I say. The sooner you can talk to financial and mortgage professionals, it's really ideal. The sooner, the better
Absolutely.
in the process.
So a lot of people haven't heard of this Certified Divorce Lending Professional, CDLP designation. Can you talk a little bit about what that is and what motivated you to pursue it?
Absolutely. So any lender can essentially take the course and study and become a CDLP. There are, some criteria. You have to have some experience and know some basics, but it was an investment of time to really dig deep into the different aspects of mortgage lending with professional training specific to divorcing clients. It's not a traditional loan officer type role. It helps take into consideration all of the different nuances of how the real estate component works in the legal separation, in the legal divorcing process. I'm trying to come up with the correct terminology there, but it's beyond just a regular loan officer. I had to go through over 40 hours of training. I go through additional continuing education specific to the laws, both in the state of Michigan and Ohio, as well as the requirements to maintain the designation, which is typically updates on underwriting guidelines, as well as some of the, I can't act as an attorney, but understanding some of the legal nuances that go into the mortgage side. So it's keeping me up to date and up to speed on this particular, the real estate aspect of mortgage lending.
Okay. So how is the approach when you're working specifically with clients who are going through a divorce? How is that different from just working with clients that are under different circumstances?
Yeah, absolutely. Well, I start with tell me your story. I'm first and foremost, I'm dealing with people. I'm not dealing with alone. I'm dealing with people in their lives. So what I do, I listen to the person, their story, why they need to talk to me. If the goal is to keep the home or take the proceeds from the home and purchase a new home, understanding the why behind it, because sometimes it might make sense for a client that might want to keep the home. It might make more sense for them to sell it. And we go through the numbers and the math and the understanding of all of it. Again, with empathy and compassion, because there's so much that goes into making that decision.
Absolutely. In your experience, what have been maybe like a specific instance where you provided significant support to a client who was in a challenging situation?
I would say this is the story that kind of really pushed me to become a CDLP. And it's very near and dear to my heart as someone who's both a product of divorce and watched family members go through some icky divorce stories. This was a gentleman who has 4 children. His wife had filed for divorce, left him with the 4 kids, and she had never worked, so was entitled to both alimony and child support for joint custody that she was awarded. We realized that he just desperately wanted to have some stability for the kids. He's like, I'm trying to figure out a way to keep the house. I really, really want this home to be their home, that they have that place that they can always count on will be here. So in doing the math, I just couldn't get the numbers to work with all of the existing mortgage as well as the child support and alimony. What we came up with was he had a lot of equity in the home. So in lieu of paying monthly alimony or spousal support, I guess is the correct terminology, we gave a lump sum settlement in lieu of that monthly alimony, and he was able to afford it. And he was so relieved, like the sound in his voice and the relief. And he told me, he said, "LeeAnn, I'm actually crying right now." So it meant so much to him to have that type of answer. And I'll tell you, most, in years past, I may not have thought of that. And it was actually a recent, I had attended a little seminar regarding becoming a CDLP. And I don't know that it was this particular answer, but it was using equity in a home as part of the equity buyout, but also for things like alimony. And it just triggered something in my brain. And I thought, yeah, I need to be able to provide these types of answers because it's so impactful to be able to provide that type of advice to a client and just see the pure relief. So that would be a recent example.
That's such a great example. And such a common struggle for people to figure out the cash flow issues, right? Like a lot of times, some of the work that we're doing is looking at how do we reposition investments to generate additional cash flow, to generate additional income for people. A lot of times people are invested for growth, but they may benefit from that change in strategy post-divorce, depending on what their needs are. But I like that looking at the equity as an option. I mean, there's so many. It's just a puzzle that needs to be solved, right? Mm-hmm. And so knowing that there are lots of pieces that can be moved around and looking at all the different angles, it's so important to have people like you in clients' corners so that I know that they do have options and they can kind of figure it out. Yeah. What are some of the most common concerns clients have during the divorce process regarding mortgage lending?
The biggest concerns are number one, affordability. Can they afford the new payment if there is an equity buyout? Number 2 is the timing. When can I do it? How soon can I do it? Nobody wants to sell a home and then have to move twice. So working with clients and putting in front of them essentially different strategies, again, to save expenses and perhaps sell and immediately buy or purchase a home without selling the home. The biggest thing is that, again, that stability and simplicity in that particular segment. The other piece is credit. And I think that's something we sometimes forget about in this whole process. With credit, when you've had joint credit with a spouse, and then all of a sudden you have to close that account, it can impact your credit score. So I find, again, the sooner the better. I can talk with clients about the process and what credit they have. We start with a credit report. Like, let's start with a credit report, see what credit you have that's joint. Even if you don't have a card, it might still be on your credit report. And making sure that's been addressed to, again, look at what that credit score might look like for credit qualifying, because that impacts both the interest rate and the ability to actually be able to, get a mortgage. So that's one of the timing, the credit. Another component is just being able to maintain a home on your own. I had a woman that had gone through divorce, had big, beautiful home, and she realized she didn't want to buy another house. She wanted a condominium. And that's a little bit different qualifying piece as well, because you have to factor in some additional expenses. But just knowing lifestyle and being able to either maintain a lifestyle or have the information to make that lifestyle manageable.
Yeah, I like that you brought up especially the credit issue, because so many people don't pay attention to their credit through the divorce process itself.
Mm-hmm.
They may have started the process with stellar credit, but then, with legal fees or, with changes in kind of the living expenses and things like that, a lot of times they accrue a substantial amount of debt during the divorce process. And then at the end of it, they want to be able to do something with the mortgage. And it's like, if you hadn't done this, that, and the other, it would have been a much simpler transition. But it certainly does complicate things when people aren't paying attention to that. So I agree. It's so important to talk to that lender early on so that they know what they can and can't do. And then, of course, a lot of times people don't think about what happens when you start to cancel and close accounts. And being very strategic about that and thinking about the timing and all of that is so, so, so important. I know one of the big things that I work with a lot of clients on right now, specifically within, recent years, of course, is that people have amazing interest rates on their mortgages from several years ago. Oftentimes we're looking in like the 3% range and certainly are not able to get that kind of an interest rate now. And so really struggle with, well, do I keep the house and have to pay a higher interest rate? How do I keep the existing mortgage? What can I negotiate? What do you tell people who are really struggling with that?
Oh, man, those were good times. Those interest rates were phenomenal. The reality is rates are higher now. We know that. There actually are some lenders or servicers, I should say, companies that are actually servicing the mortgage loans that will allow an assumption. And that's not something I can do. It's something that they have to contact that servicer to see if they're able to assume the remaining loan terms, removing the other party from the note and the obligation. It's not something standardized. It's not something that is required of lenders to do, as I understand it. But it's worth a shot. And it's worth looking at if you want to maintain that home or keep it, seeing if that can be done. I know it can be a lengthy process. And again, it's understanding what words to use. There's some terminology I share, as well as a little bit of, again, being part of my CDLP, part of the Certified Divorce Lending Professional Divorce Lending Association group. We share information with each other for this type of circumstance. And there are some lenders that have criteria, and I'm using the word lender and servicer interchangeably. So whomever it is that's servicing that loan may have criteria where they'll do it, but there are some different steps to it, and it can take some time. So making sure you understand what that is, if it's doable, if you can afford it, and then also allowing time within the judgment of divorce to be able to accomplish that. So that's ideal. The other piece is maybe downsizing. So with rates being higher, folks might need to reset expectation either on how much money they want to borrow on a new home, or again, look at a little different lifestyle, maybe a little lower mortgage amount compared to what they have to have that same payment.
Yeah, absolutely.
One thing though that I tell clients in all phases that that I'm working with, especially in today's current market, in the irony of the comment, marry the house and date the rate. Meaning, if you're looking at a new home, if it's the right house, know that the rate is not permanent. You can always refinance down the road. We can't predict or project what rates will do in the future, but that part is not permanent. So I don't know, just kind of the irony of our conversation and just something to keep in mind.
Yeah, it's a really good point. Absolutely. So I know that divorcing clients in particular are coming to you feeling emotionally overwhelmed, financially overwhelmed. How do you ensure that empathy and understanding are really at the center of your interactions with clients who are going through a divorce?
Well, as I started out our conversation, I start with, I want to hear their story. I want to hear who they are and what their goals are. So with that, I ensure that I'm keeping up with where they are emotionally in the phase. They're the multiple phases of divorce. And my promise to my clients is being transparent with information. And that I think could be incredibly reassuring, because then you're not having to guess, where do I sit? Where do I stand with this person? Sometimes the news isn't what I want to tell. It's not comfortable. This is a tough decision and a tough answer, but it's the right answer for the circumstances. So an example would be a client who was going through a divorce, who wanted the big house and wanted the lifestyle, and her income just didn't match that. And I told her what her budget was and how that would look and what it would look like. And she goes, in my mind, that makes a lot more sense. In my heart, I had to try. So providing that information, and she wound up finding a really lovely home just in a different city, and it worked out well. And it was a win-win. But giving that transparent, honest information with the kindness and the compassion and the understanding of, here's the information, and let it kind of settle, and we'll kind of go through the different options and see if there are any other pieces that might make sense to you, whether it's maybe taking additional cash and putting a larger down payment, whatever that might be. But truly listening, hearing the goals, and providing information both in writing as well as verbal, and having that dialogue. It's not just black and white. Here's what you need to do. There are some communication dialogue pieces that need to happen too that might be helpful to both of us.
Absolutely. Yeah, for sure. Well, LeeAnn, I really appreciate you taking the time to talk with us today. I know the mortgage can be a complicated, difficult, emotional issue for a lot of people who are going through a divorce. And it's just nice to know that there are people like yourself who have that certified divorce lending professional credential, have the resources of that association and other professionals with that designation to really bounce ideas off of, so you can get creative with solutions and come up with ideas that maybe your traditional mortgage lender wouldn't be able to think about. So this has been really helpful. Thank you so much for being with us. If people want to learn more about you, where can they find information about you?
So I have a Facebook page, and it's just LeeAnn McKeon. I'm on Facebook. I have Instagram, same name. My current mortgage company that I'm affiliated with is Movement Mortgage. So it's LeeAnn McKeon and Movement Mortgage. If you Google it, and I should pop right up. So those are my social media areas, but then also anytime, call or text. My phone number is a great way too. And I can share it here, 734-564-1909.
Terrific. And we'll make sure to include all of the links and the phone number in the show notes. So if you need to reach out to LeeAnn, remember, earlier is better. So you don't come to agreements that you cannot actually uphold because maybe you weren't well informed around your options. So keep in mind that it really is a good idea to work with a lending professional sooner in the process, and that there are people who have this special training in divorce specifically that can really have an understanding of what empathy looks like through this process. And so you don't have to be afraid to reach out to folks like LeeAnn. Again, thank you so much for joining us today.
Thank you, Leah. I appreciate the opportunity. Thank you.
It's my pleasure. And for our listeners, thanks for being with us this week, and we'll see you next week. Thank you for joining me on Intentional Divorce Insights. It's a privilege to share this time with you. I hope each episode offers valuable guidance to navigate your journey. If you find our content helpful, please leave a review to help others discover the benefits of intentional decision-making in divorce. Until next time, take care and continue to embrace your path with intention.